So now we're in 19.2, where we're going to estimate renters insurance premiums, and we're going to use a table for that as well. And we're also going to estimate homeowners insurance and then find compensation with a co-insurance clause. But the first thing is we're going to estimate the renters insurance premiums. So let's use an example. Susie wants to buy renter's insurance. She has excellent credit and decides she needs a $40,000 policy with $500,000 liability and $1,000 deductible. She adds identity theft / fraud protection and $4,000 coverage for her engagement ring. We're going to find her total annual premium if she has a good credit rating. So the way we would find that information out is first, we would look at the table. And this is table 19-3. Okay, so for table 19-3, and there'll be some items marked up as well. I'll explain that in a few. And I'll post this with the video as well. When you look for the type of, for 19.3, you look first at the type of policy. So her policy is for $40,000. So you look at the policy that's $40,000 limit. And then from there, you look at what type of deductible she'll have. She has a $1,000 deductible. So that takes you to the right column of the policy. And then we know that she has good credit. So we know she'll be under good in the chart. So then from there, now we have to worry about what is her liability. They said in the problem that she had a $500,000 liability, which is the second one down. If you look under liability, it's $500,000. So you go to the 40,000 good column and you go to the number in the middle because 500,000 is in the middle. And that base annual premium is $185. So we start with that. This is the base annual premium. Okay, base annual premium, $185, and that's from the info in the chart. Now, we want to figure out the cost per options that she picks. She picked an option, which is under the category of options, is the identity theft protection. That will be $20 per year, and that's a given solid number. So we know ID theft, that's $20. So ID theft / fraud, that's $20. And then also, so that's the only option she added on. She has two options to choose from. She only chose ID theft. So that's one. And now we have to find the cost for her extended endorsement. An endorsement would be an item like a camera, a ring, jewelry, watches, all kinds of things like that. So now there's a category for jewelry, watches, and furs. They're 80 cents per every $100 per year. So we noticed that she wanted to add $4,000 coverage for her engagement ring. So in order to find that, we're going to have to calculate the cost for that endorsement. So the cost for the endorsement okay, so you're going to take the amount her desired coverage. Her desired coverage is $4,000 for this ring. So you take that and you divide it by 100, and you're going to multiply it by the rate that it costs to protect that ring, which is on the chart 85 cents. Okay, so you're going to multiply that by 85 cents. And once that's multiplied out for the 85 cents, you'll note that it ends up being $34. So now, in order to find her total annual premium, you have to take the base annual premium and add the option to it and the cost of the endorsement. So, put that right over here underneath. So, the total annual premium equals, we take our base annual premium, we add to it the option that she picked, and then the endorsement. So when you add those all up, you'll end up with a total of $239. So that's what she's gonna end up paying for her options that she chose for that $40,000 policy with a $500,000 liability and a $1,000 deductible, and to protect her engagement ring. And because her credit is good, that's the total premium she'll end up having. $239.